Yo, 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 it's your boy, the Insurance Junkie, your fiduciary fella, the all-star advisor Alonzo Hall, and I've returned today with another ADH Wealth Solution. Today, we'll begin to discuss fulfilling all of your financial needs. To contribute to channel growth, the links are in the description. To schedule an appointment of your own, or to purchase life insurance directly up to $1 million with no medical exam and an instant decision, my information is in the description. Lastly, make sure you hit that like, drop a comment, subscribe, and hit that notification bell so you're made aware every time I release new content. And as always, share, share, share. And now, here's our next feature. Salute, 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 salute. It's your boy, the Insurance Junkie, your fiduciary fella, the all-star advisor Alonzo Hall, and I've returned today to whap and tap on your head with another ADH Wealth Solution. Today's article, what is whole life insurance and how does it work? An article from money.com. Before we go in, ladies and gentlemen, make sure you hit that like, drop a comment, subscribe, and hit that notification bell so you're made aware every time I release new content. And as always, share, share, share. Lastly, to contribute to channel growth, to purchase life insurance directly up to $1 million with an instant decision and no medical exam, or to schedule a one-on-one appointment with a licensed financial professional, the links are in the description. So as we proceed to give you what you need, again, this is a common question that I get all the time. What's the difference between term and whole life? Again, term would be renting, permanent would be buying. So if you're leasing a car, that's term life insurance. Once that lease is done, you don't get to keep the car, you got to give it back. Well, technically you could keep the car, but you got to pay a bunch of money. And if you're financing or purchasing the car, once the payment is done, that's it. You're done paying for it, but you own the car, so you keep the car. So term life insurance would be renting the car. Permanent life insurance would be financing or purchasing the car. So whole life insurance is a permanent life insurance policy that guarantees a fixed death benefit for the beneficiaries and a cash value savings component for the policyholder. So, how does whole life insurance work? Whole life insurance works as a permanent policy that builds cash value over time. As long as the premiums are current, the policy remains active for the entire life of the policyholder, and the beneficiaries will receive a set death benefit upon the insured's death. The insured pays fixed level premiums which are allotted between several portions. Partial funding for the policy's face value, i.e. the death benefit, the insurer's operating costs, which is the cost of insuring you, and profits, and then contributions to the cash value account. So what does whole life insurance cover? One is a death benefit. Your beneficiaries are entitled to receive a tax-free lump sum death benefit at the moment of your passing. There are no use restrictions. A death benefit payout can cover costs associated with your death, estate planning, burial, funeral, and debt settlements. The amount doesn't change during the policyholder's lifetime, but if there are unsettled cash value loans after their death, the debt is deducted from the death benefit. The policy can expire at its maturity date when the insured reaches age 100 or 120. What happens next varies. Generally, you'll do what's called that's called endowing, and they'll just send you a check for the cash value, generally. Some companies pay out the cash value and close the policy. Others grant policy extensions or nothing at all. The minimum coverage amount is usually $100,000, but many policies cover $1 million or more. Cash value, a living benefit that works as a safe investment and savings account that the insured can access throughout their lifetime. The cash value amount is guaranteed, meaning that the insurer pledges to uphold a minimum interest rate. Funded with a portion of the premium payments, the amount earns interest and builds cash value on a tax-free basis. So, insurance riders enhance the coverage and modify the terms of the policy. For example, you can work around a policy's maturity date by purchasing a maturity extension rider, or access the death benefit while still living by adding an accelerated death benefit rider. Eligibility. Eligibility is determined by age, gender, employment information, medical history, and lifestyle. Insurers require a medical exam, but if you'd rather skip this step, some companies do offer a no-exam life insurance alternative to the traditional underwriting process. What is the cash value of a whole life insurance policy? Most people buy cash value life insurance to build tax-deferred earnings. This living benefit works like a low-risk investment account, providing an extra source of income for retirement, college tuition, or emergency funding. There are, however, other options that might serve a similar purpose, such as an annuity. A cash value account grows so slowly but with guaranteed rates, regardless of market fluctuations. It earns interest on a tax-free basis as you continue making payments. It grows faster during the first years of the policy, but it does slow down as you age since the cost of insuring you demands a larger portion of your premiums. It stays with the insurance company when the policyholder dies, unless the policy included a rider that states otherwise. Now, there are 4 ways that you can access your cash value earnings. One is policy loans. A policy loan is a tax-free and less restricted than other types of loans. The insurance company lends the money and sets up a flexible repayment plan with low interest rates. Your cash value earnings serve as collateral. Withdrawals. Policyholders can withdraw directly from the cash value with partial cash surrenders. These are final and can reduce the death benefit payout. Withdrawals are taxable if they've exceeded the cumulative amount you've paid in premiums, and withdrawing the full cash value amount triggers a policy lapse. Surrendering the policy. Surrendering a policy cancels it and nullifies the death benefit. You will, however, receive the cash surrender value, whatever cash value is left after surrender charges and fees. Any cash surrender value that exceeds what you've paid in as premiums is taxable. Using it to make premium payments. You can use the cash value to cover monthly premiums and stop making payments out of pocket. It will take several years of high premium payments before this is possible, and if you empty the cash value account, the policy can lapse. Dividend paying whole life insurance policy. A participating whole life insurance policy can earn dividends on top of the guaranteed cash value and death benefit. If and when the insurance company generates a surplus of profit, policyholders receive dividends as partial refund of premium payments. They may use these earnings in several ways: as cash or check payout, as contributions to cash value account, or to make advanced premium payments. They can also use it to purchase additional life insurance coverage. Before borrowing from your cash value account, remember, mismanaged cash value loans can lapse your policy, nullify tax-exempt status, and reduce the death benefit. Withdrawals and loans that exceed the cash value amount will be subject to taxation. Withdrawals and outstanding cash value loans will reduce the death benefit payout to your beneficiaries. Policy loans and withdrawals increase the risk of policy lapsing. Due to its low annual growth rate, it can take up to 10 years to build up enough funds before you can actually borrow. So I'm going to skip over the pros and cons and how to buy insurance. You want to figure out how to buy insurance, you sit with a licensed financial professional named Alonzo Hall, and I'll help you. Other than that, we're going to look at people who benefit from whole life insurance. Whole life insurance works for people that want long-term protection and can afford the higher premium rates. One would be parents, to ensure your children's financial well-being. Things like funding education, build a trust for children with special needs, and etc. Couples, to cover daily and future living expenses such as mortgage payments or for a spouse or a partner. Older adults, to cover financial obligations, funeral costs, final expenses, and supplemental Social Security income. Business owners, to ensure the operation of a business after the owner's death or to cover debt-related operations especially if it's backed by assets like a family home or the family needs to buy out a partner. People who need estate planning to help your loved ones cover estate taxes, assets management, and other death-related expenses in the case of the policy owner's unexpected or accidental death. Businesses that need to insure a key employee to buffer any financial setbacks after the loss of an essential employee. And now we'll look at people who don't benefit from whole life insurance. Life insurance is a welcome safety net for anyone, but purchasing a whole life policy may not always be the best choice for people in average income brackets. Expensive premiums are not compatible with average wages. People who work, have dependents, large mortgages, and other debts are best served by term life insurance. That's, again, you're literally just telling your family, I plan on dying so you can get this bulk of money. If you don't plan on dying in 19 years if you have a 20-year term, or 29 years if you have a 30-year term, technically you've wasted your money. Older adults who need to boost their retirement. Older adults should look for the best life insurance for seniors, which is a whole life policy, before considering a whole life policy. The cash value will grow at a very slow rate, and you will pay extremely high premiums without seeing much returns. So pause really quickly. Those Colonial Penn commercials, those are whole life insurance too, which is why it's very difficult when people speak against whole life insurance, because they're talking about policies like that. And lastly, buyers looking for investment opportunities. Focus on maxing out your 401k and IRA contributions before considering a whole life insurance policy for investing benefits. A policy's cash value earnings resemble money in a savings account. Tax-free, secure, and stable, but won't earn impressive rates. That's untrue if you get like an index universal life. Anyway, ladies and gentlemen, that's it for today's article. Make sure you hit that like, drop a comment, subscribe, and hit that notification bell so you're made aware every time I release new content. And as always, share, share, share. Lastly, to contribute to channel growth, to purchase life insurance directly up to $1 million with an instant decision and no medical exam, or to schedule a one-on-one appointment with a licensed financial professional, my links are in the description. With that being said, wipe ass, work in progress every day, and see success. Salute. Hey folks, this last video was sponsored by my company, where we help people like you to reach their financial goals. We do this through a simple conversation where we help to identify and then protect your lifestyle, and then we implement a plan. The process starts at about an hour. So, if you want more information or you want to schedule a consult, contact me via the information in the description box, and let's talk and see if we're actually a great fit for each other. And remember, ladies and gentlemen, when people challenge you, they don't challenge you to challenge you, but they challenge you to challenge you. Accept the challenge. Thank you, and enjoy life.